Hi, this is Zak Mir with the US penny stocks highlights for Friday, the 14th of August. And it's a good selection today in the sense that we've got shares that are just starting off on their journey, hopefully on the bullish side. First stock here is Agile Therapeutics. You can see the break of that near-term triangle, a break of the 50-day moving average as well at $2.66. And at least while we're above the floor of the rising trend channel at 247, we're looking for higher prices up to the the late February resistance line projection at $4, hopefully as soon as the end of next month. Another new situation comes in the form of Antero Resources. Here, I suppose it's actually midway, but we've had a nice mid-move consolidation here. That broken resistance line there at $3.84. Above that, looking for further upside, perhaps as high as the top of that rising trend channel, once again from the end of February towards $5.90. And again, hopefully by the end of next month, perhaps as soon as the end of this month, if we have a decent close above the initial August resistance at $4.40. Moving along, and the next stock is BioDelivery. Science is almost impossible to resist anything in the bio area at the moment, obviously. The highlight here, the way the shares have broken through the 200-day moving average at $4.98. End of day close above that, which would obviously be an end of week close as well today, points the shares up at the top of the early March trend channel there at $6.50. Hopefully by the end of this month, perhaps as late as the end of next month, but there's a chance, I suppose, you can get to that zone by the end of this month. Stop loss at the moment back below, just below today's low, so sub 460 would be good either on an absolute basis or an end of day close basis. Moving along to this stock, which again is a new one for the penny stock selection, and just starting off as well on the brilliantly named Muscle Maker. We've had a break of the rising 50-day moving average earlier this week. I suppose that was on Tuesday for the shares, through the $2.40 level, above $2.40, looking for more upside. Obviously, a break of that June intraday resistance at $3.13 would add a bit of confidence, but it does look as though this is a bull flag breakout, and with the rising 50-day line, we're looking for a decent rally here, perhaps as high as the top of the February price channel up there at $6 plus by the end of next month, but that clearly looks like a decent risk-reward play. Also looking decent in terms of risk-reward is the next stock. I suppose depending on how we close today, that old peak from January around $5.02. If we can hold above that on an end-of-day close basis, we should start to head higher, as high as $8, which is the top of the November uptrend, rising trend channel. Otherwise, filling the gap down to $4.60 could be the risk here. But either way, while we're above $4.60, the upside appears to be relatively assured after today's gap that we have been treated to. On to a new name for the penny stocks, and here it's Merrimack Pharmaceuticals, yet another pharma play, breaking through that old resistance from April at $4, and while we're above $4 on an end of day close basis, looking as high as $7 at the top of that rising trend channel from November, and time frame on that hopefully the next 4 to 6 weeks. We've had a great run for Midatech Pharma today, earlier in the UK. Shares up there up to 50% and maybe more at one point. Following the lead of Midatech in the US, which is nice. It reminds me of the way Tiziana was a few weeks back. Current situation is that we've got the key support level for the shares at 250, let's call it 256. While we're above 256 in the 200-day moving average, the orange line there, on an end-of-day close basis, we're looking for not only a retest of recent resistance through $4, but a best-case scenario target over the next 4 to 6 weeks at the top of the rising May trend channel at $6 plus. New stock for the select for this particular video series is Party City, where we've broken both the 200-day moving average and that line of resistance from January at $1.80 at the start of the week. Starting to accelerate now. Obviously, there is some resistance there at $2.70 or so from June, but at least while we're above the $2 area, looking for a move towards $5, $5 plus, in fact, at the top of that rising November price channel. The stop loss just below the low of today at around 210, so down from 210 down to perhaps $1.95, depending on your risk profile. Just a couple of stocks to go. One is a repeat. I think one of the early repeat of the day, in fact. So a stock we've covered quite recently. Here we've got a bull flag breakout after the gap higher through the 20-day moving average. Very strong signals there, especially the gap through the 200-day line really is a handbrake turn in terms of the price action. End of day close above the high of earlier this week at $2.16 would be a decent sign that we're heading towards the top of that rising trend channel from December, as high as $3.20 over the next month or so. Finishing off with this stock, yet another pharma situation. Xeris, nice early start in the progression here, just bouncing off the floor of the channel and breaking the 50-day moving average. So that's around the $3.55 level. While we're above that, looking for a best case scenario target up to $7 at the top of the February price channel, and not really much to wait for now. The weekly close at current levels should be enough to take the shares on their way to that $7 target while we hold above $3.60. That's it from me today. Join me again early next week.